Assalamualaikum, I'm Shazah Hazwani binti Muhammad Rizwan, and today I will be presenting about Tawarruq, contract of financing. My metric number is 2025301007 and I'm from BA2722K. Tawarruq concept. Tawarruq derived from the Arabic word al-wariq that refer to silver and dirhams. It can be defined as three parties that involves in purchasing contract whereby the first buyer purchase commodity from the owner on deferred payment basis and proceed to sell it to the third buyer at low price to get immediate cash. Tawarruq-based products that are commonly used are personal financing, working capital financing for SMEs and corporate, as well as Islamic credit cards. Next characteristics. I have come up with three. Firstly, consists of two sales transaction. Owner sell the goods to first buyer at markup price to gain profit, which is the first transaction, and first buyer sell the goods to third parties at lower price for liquidity purpose, which is the second transaction. Secondly, tools for generate cash. Tawarruq provide customer an immediate cash to be used for many purposes like personal finance, business liquidity, and Islamic credit lines. Lastly, markup-based profit where bank will receive fixed return on a pre-agreed markup, which is a form of income for bank. There are two types of tawarruq. The first one is classical or individual tawarruq, whereby al-mustawriq purchase commodity on a deferred price from a party either by musawamah or murabaha and proceed to selling the commodity to a third party for immediate payment. Second, organized tawarruq. It is a formalized version of tawarruq whereby Islamic financial institution IFI has agreed to purchase commodity on behalf of the clients from a vendor and proceed to sell it at a higher and deferred price to the clients. So, the clients can choose either to sell the commodity to another party for an immediate payment by themselves or appoint IFI as an agent to sell it on behalf. The first issue is encourage the increase of debt. Since Islamic debt instruments are widely used nowadays, such as Tawarruq, it has created a rapid increase of debt by individuals and business. Most Islamic financial institutions, IFI, decide to make this instrument, Tawarruq, as a way of financing that easily can be applied and approved since it is a Sharia compliance contract. However, in fact, Tawarruq still has resemblance of conventional debt because it promotes a fixed profit, like interest. In Malaysia, the usage of Tawarruq by banks are commonly used to finance home loan and credit card debt. High number of borrowing is a reflection of unethical mindset and practices, as it affecting the image of Islam in itself. To solve this issue, IFI should have a proper conduct to restrict the usage of Tawarruq concept for the right purpose and needs. This refers to a policy that limits the usage of Tawarruq for individual and business who really in the needs of liquidity that can be very helpful for this issue. For instance, in the case of emergencies by individuals as well as to meet short-term obligations of the business. Therefore, this will ensure that the number of borrowers are under the control. Hence, it is such an obligation for banks and IFIs to come out with strict terms and conditions in applying Tawarruq products for its customer to prevent the prohibited elements of Sharia like interest, uncertainty, and gambling. Second, arguments by the scholar. Tawarruq concept is not universally accepted and practiced due to its controversy in terms of Sharia compliance in Islamic laws. Most scholars like Hanafi, Maliki, and Shafi'i concludes that they allow Tawarruq transaction under a condition of no interference by the first seller in the second sale transaction, which is the classical Tawarruq. However, organized Tawarruq promotes interest-based loan and abusing the ethical foundations of of Islamic finance. When banks act as intermediaries, the Tawarruq has turned into a profit-oriented financial product, and it is also lack of economic substance, since no real commodity involved in this contract, which also become a concern. As for the solution, the international Sharia bodies like Accounting and Auditing Organization for Islamic Financial Institutions and International Islamic Fiqh Academy helps to govern the Islamic Financial Institution (IFI) to ensure that all the products used for consumers are compliant with Sharia. Hence, it is a responsibility for IFI to fulfill the standard and regulation and only operates with permissible contract of Tawarruq. In addition, transparency should be prioritized as to ensure that the Tawarruq transaction between the clients and IFI are clear and trusted. This is important to prevent the misuse in Tawarruq-based products. Last but not least, barriers of risk sharing. As for the Tawarruq-based transaction like fixed deposit, accounts, and commodity murabahah, the bank profit margin as well as the client's repayment terms are fixed according to the predetermined agreement, which is identical to conventional interest, where the bank will gain a fixed profit even if the client suffer financial losses. Hence, the clients will bear the risk alone in this case of business failure, which break the fundamentals of Islamic principle itself. Risk sharing. It has ruined the values of benevolence, justice, and fairness, which also provide protection to all parties while growing the economic activities. As for the solution, the customer itself must have adequate literacy to determine the best bank product that actually suitable for their needs and wants, since most IFI, like banks, prefer Tawarruq contract since it offers some benefits of low risk and highly predictable return for banks. In order to gain more knowledge, they can join the awareness campaign that showing the benefits of profit and loss sharing. Enough literacy will help them to examine the cost, risk, and ethical value of Tawarruq compared to other risk-sharing products like Mudarabah and Musyarakah concept. To conclude, Islamic finance and banking must be theoretically and practically different from the conventional, as Tawarruq concepts are widely used as the liquidity management tools. It is deniable that it has become controversial due to all of these issues. Organized Tawarruq has violated the principle of Islamic finance that highlights the value of justice and fairness in terms of the risk distribution of parties involved. Also, this predetermined contract agreement also has lacks of real asset possession or economic activity that has breached the Islamic principle. So IFI must operate the business under code of conduct and ethics in providing the best service for its clients and strictly adhere to the Sharia principle. Due to many issues of Tawarruq, like lack of risk sharing and disagreement of the scholars, as it identical to interest-based lending financing, most IFI can focus more on promoting other risk-sharing contract of Islamic financing products such as Mudarabah, Musyarakah, as well as Sukuk that emphasize more on the Sharia principle and guidelines. These alternatives have better aligned with the Maqasid al-Sharia, as it promoting justice among parties, has equitable distribution of wealth, and support a real economic activity. A collaboration of regulatory bodies and Sharia governance bodies is also important, as they must to step up on their game in providing clear and standardized guidelines regarding the permissible use of Tawarruq. The application of organized Tawarruq should not be compromised, as it violates the ethical foundations of Islamic finance. Furthermore, it can improve the global view of Islamic finance, which indirectly growing the Islamic finance industry while maintaining financial system that offers partnership, transparency, and shared wealth.